Welcome to Second Take, the show that focuses on the issues behind the news. Mining Weekly editor Martin Creamer joins me today to unpack the latest in the mining industry. Welcome, Martin.
Thanks, Ashley.
Now, Northam paid 2.4 billion rand in dividends and highlighted its business risks ahead.
Yes, I didn't realize that the basket price of the platinum group metals has slumped to such a degree that if it continues like this, Northam is foreseeing forced closure of some of the mines. So this world of turmoil at the moment, with the fighting in Ukraine, the inflation that's being set off as a result of it, the price increases across a broad front, are causing businesses to pull in their horns very, very sharply. And platinum group metals is going to be one of them, as Northam said. Going forward here from the current position, we're going to be very conservative. Because it's the only way we see a through path at the moment. And when we look at the whole industry, we would say that 70% of it is underwater at these prices, when you take into consideration that they've got to have stay-in-business capital. If you're mining, for every ounce you take out, you've got to put another ounce in. And against that background, he feels that the world has got to realize that unless they're prepared to pay more for these platinum group metals, we're going to have closure and therefore less supply, and therefore the chance of much higher prices coming in the future. But you can see that Russia also being a big part of platinum group metals and selling into China directly because it can't sell into the world and doesn't want to sell into the world possibly, is causing a lot of disruption. And we've always looked at the way that platinum prices set up in the world. And many have said, gee, it's remote, we're far from it, we're the biggest supplier. But the way they set the price is remote, sometimes obscure. And you wonder whether we can also continue with this world pricing, the way they price it. Perhaps, there needs to be some bigger spotlight put on it so we can understand it clearer and see whether it is the ideal way to go.
Now, Vedanta Zinc is ready to invest $500 million, but only when the rail and energy issues are resolved.
Yes, so they've already done their first 500 million. They promised 1,000 million when they first set out, and they've done brilliantly, with their first investment. The zinc is just one part of what they're doing there. They really support the community. They believe in that. They're going into a big special development zone, and they're the biggest participant in that. They want to really be active there because they see this as a great big zinc possibility. And zinc being part of the new green world, they want it to be green as well. So they've even come in with some of their own energy. But on the bigger front, if they're going to have refining there and they're going to have smelters there, they're going to need a lot more assistance and a lot more assurance. They also need a short rail addition. And if all those things go ahead, they'll certainly put another $500 million in, which we want at this stage, which we need at this stage. But they also see tremendous potential for beneficiation of the zinc, really going downstream in that area where they like mining in that area in the Northern Cape. They see a lot of potential. And if they've got to go ahead in Namibia as well, they're also going to need a different energy regime there, because they say the price of energy there is really high. And so they will need to look at that. There's also that great belief in going green. So hopefully we'll see a lot of renewable energy come through at some stage. But in the meantime, they would be flat out, as they said at BRICS, provided they get some sort of assurance that the energy and rail will be there.
Lastly, tell us about the lower carbon energy supply for Hillside Aluminium.
Hillside Aluminium is a very important operation in South Africa. It's one of the biggest aluminium producers in the world, in the Southern Hemisphere. It employs a lot of people there, but it came in on a different system when we had a lot of energy. We had a lot of spare electricity around. So they gave the Hewlett Aluminium a special price, which was a little bit too special. And even though they have renegotiated that price, if you sort of say it's a business case to go in with renewable energy, because of the deal they got there, you can't just say that straight away for South 32. But they're determined they want to find solutions. Of course, from the lower priced energy, from Eskom point of view, they've got quite a lot of space till 2031. But they realize that the market is not waiting. You know, Europe is saying we want green aluminium now. And parts of the Americas as well. So they're very conscious of that. So they need to really start moving. They want to try and do the special nuclear deal with Eskom, but whether that's going to come through or not is, you know, a big moot point. So the real thing to do is to get renewable energy going very, very fast, and then to rely on that additional renewable energy which should be coming through on the main grid, because Hewlett is also reliant on that. And it uses what it gets from Hillside Aluminium to produce products that are exported, and those products also need to be green. So it's a big need to go green as fast as possible.
Thanks for speaking with us, Martin.
Great pleasure, Svasni.
That's it for today. Join us again next week for more news and analysis on the local and global mining industries. To subscribe to Creamer Media's Engineering News and Mining Weekly, please email subscriptions at creamermedia.co.za.